Hi, my name's Tony Joe, real estate expert here in Victoria, British Columbia. Thanks for tuning in to this segment. We're going to be talking about buying up in a downwards moving market. Buying up in a downwards moving market. People are often very concerned when the market starts getting softer, when they start seeing prices go down. And oftentimes it means they put their plans on hold to move. But there is actually an advantage to buying upwards in a downwards moving market. And that's the reason why I wanted to share these figures with you today. By the way, there's no hocus pocus here. There is no black magic. These are all facts. And actually, these are experiences that we have seen over the past 20 years that I've been in real estate here, and it has been beneficial for many people. Anyways, as you see here on our chart, we've got time. So this is 1 year, 2, 3, 4, 5, 6, and we've got the price levels up here. Let's just say that you purchased the property you're in right now years ago at $250,000. Now, what often happens in real estate, of course, is that properties increase in value over time to the point where, for instance, between 2001 and 2007, Victoria real estate values doubled in that 7 years. So any house that was purchased for $250,000, we knew that we could sell for $500,000, and that's when it hit the peak. Of course, there's always adjustments. As you know, markets are like that. They're organic, so markets go up and down. And let's just say, as a point of interest, value's gone down to the point that perhaps, and again, I'm going to use this figure very loosely. Let's say the market goes down 10%. I need you to know, by the way, that Victoria real estate values have not gone down 10% for a long time. It's gone down 2.5%, 5%. I'm using 10% here just as a rough number, so it's easy for me to articulate and very easy for you to understand as well. So let's just say again, over this amount of time, what happened was your $250,000 property hit actually $500,000 because it doubled in value, and then an adjustment happened to the point where all of a sudden it's only gone down, or it has gone down to $450,000. So in other words, it has lost $50,000. Now the question is, have you actually lost $50,000? You may have on paper, but the thing is, if you choose not to sell, it doesn't really matter, because don't forget, you bought at $250,000. It doubled in value and then it went down a little bit. So all things considered, you're still in a much better position than you were when you bought at $250,000. So now let's think about the other house. Statistically speaking, people purchase 50% above where they're at. So in other words, a $200,000 property owner will likely move to $300,000, 50% up the next time. A $400,000 purchase typically goes up to $600,000. And someone who is selling their $600,000 house will typically buy a $900,000 house. So again, we know statistically people tend to purchase up 50% in value. So in the case of this here, let's just say you had your $500,000 property and you've got your eye on something that is very lovely, but at $800,000. You want to make that move because it's time for you to upgrade your house. What happened here is I explained that there was a 10% reduction in value. And guess what? When the tide goes out, all the boats go with it. So in other words, even that $800,000 property has gone down in value too. But let's do the math. If it's gone down the same 10%, what is that for the $800,000 property? What that means is it's gone down $80,000. So all of a sudden that $800,000 property is now a $720,000 purchase for you. Hope this is not getting too confusing, but the bottom line is this. When you do the comparison in a downward moving marketplace, as long as you're buying upwards, all of a sudden you are $30,000 to the better. And the reason for that is you may have lost $50,000 on the sale of your house, but you're also buying a house that has gone down $80,000 at the same time. So in other words, you're $30,000 ahead. Anyways, I hope that this is it's as clear as I can articulate it. Please, by all means, rewind the video and watch it a few more times. But I just want to say to you that buying upwards in a downwards moving marketplace is not a bad thing at all. My name's Tony Joe. Thanks for tuning in.